Good morning, Shane, and welcome back to Blue Notes on the morning of the interim result. The result builds on a strong first quarter, which was well received in the market. Are you happy with how this whole half played out?
Yeah, I'm really happy with the progress we've made. In fact, this is a result around progress, and it's about consistency of execution, and I think we've really delivered to our expectations and certainly to the market expectations.
And the hallmarks were very strong expense management, capital generation, very strong capital generation, improving returns on equity for the first time in about 7 or 8 years. Are they sustainable? Do they reflect what you're seeing coming up?
Yes, absolutely. And in fact, the whole purpose of the rebalancing that we've been undertaking and the transformation is to make sustainable differences to our returns and capital generation. And so, yes, they're absolutely sustainable. That is the purpose. Because we're undertaking 3 transformations. First, there's a financial one. And a lot of what we're talking about in this half is this financial transformation, rebalancing where our capital is, making that capital work harder for our shareholders and customers. Second transformation is around the digital transformation, getting ready to be the digital leader in finance in Australia. And the third is around the cultural transformation, being more responsible to our stakeholders and actually making sure that we've got the right culture that will deliver and make this sustainable.
And are there areas where you need to do more, or are there stress points that you're seeing emerging?
I think we've always got to do more. I mean, the reality is we live in a very fast-changing world. Our customer expectations of us change and grow every day, as do a variety of stakeholders. So yes, and actually part of this transformation is just to be ready and able to be responding in real time. So I think this is essentially a new normal in terms of just being agile and transforming at pace. And so this is the way we're going to be operating for some period of time.
And one of the other messages that you've repeated often since becoming chief executive is the importance of being customer focused. Now, almost every company would say that they have to be customer focused, but are there examples now where you can see this actually attracting customers, Apple Pay, for example?
Absolutely, and I understand that in our industry, and many people talk a lot about the need to be customer focused, but it's really about execution, and the companies who are going to win are not the ones who say it, they're going to be the ones that do it. And how do you do that? Well, it's about making sure that you've got a few things to do as a company and do them incredibly well, and that you have the right culture and setup to be really listening to customers and then being able to respond at pace. And that's what we've been getting ready for. Whether that's about the executives that we've been bringing into the firm, whether it's about disposing of non-core businesses so that we can be really focused, or whether it's about changing the culture in the company to be far more responsive. Apple Pay is a terrific example, and there may be many that are a little tired of us talking about it, but it really is a big shift for us, and it's evidence of this new way of thinking, and we want to do that more. It's not alone. We've launched a lot of new features and functions, and the most recent one we've announced is embedding voice biometrics into our digital products so that you'll be able to identify yourself at a very, very secure level just by speaking into your phone. That's really exciting.
You talk about the rebalancing and the reshaping being an ongoing sort of project for the bank, and indeed one of the key pieces of data in this result is the shift of capital allocation into commercial and retail and away from the institutional bank. Is that something that reflects the times, or is that a sort of permanent shift?
No, it's a permanent shift. In fact, very early on we said we're very proud of the businesses we have at ANZ, and we essentially have 2 high-level, but we have our retail and commercial business in Australia and New Zealand, and we want them to be the very, very best that they can be. And then we've got our institutional business, which is really associated with our regional footprint, and that's a terrific business too. Our responsibility is to get the balance right between those 2. And they have very different characteristics in terms of their risk profile, the volatility of the earnings, the scale of the opportunity, what you need to do to win. And so we've said we think the right mix is about 2/3 retail and commercial and about 1/3 in institutional. And today we're at about 60-40. And so we're getting closer and closer to that desired end state. But that won't be exactly to the percentage point, but we're absolutely on the right path.
And another key focus of the report has been the strong capital generation. There's an ongoing regulatory uncertainty about where capital will end up, and equally in Australia there's particular concern around the housing market. Do you see the housing market as being a bubble, and will these regulatory changes shift that market a lot?
So I don't know that there is a housing market, and the reality is Australia's a big place, as is New Zealand in many ways, and it depends where you are. So, you know, there is absolutely not a housing bubble today in Western Australia. You know, the housing bubble that people talk about is really restricted to Sydney and Melbourne, more or less. And even within Sydney and Melbourne, there are pockets where prices are continuing to rise, and there's absolutely evidence today of areas where prices are stabilising and falling in some areas. So I think it's a little simplistic to say there's a housing bubble. Where there's an issue, there clearly is an issue around housing affordability, and in particular for people who are coming new to the market to be able to afford to get a deposit together. So there are some challenges in the business. We're a big player in that market. We have a responsibility to respond to those customer needs in terms of how to make that easier for people and convenient, but to do it in a responsible way. So there are some challenges there. There's not going to be simple answers. I think government and industry and regulators each have a role to play, and you know, we're really keen to be involved in trying to find those right solutions to those issues.
And you talk about headwinds going forward and the need to be cautious, whether that's with capital or with your risk outlook. Are you optimistic then about the second half?
Yes, we're optimistic because we're going to continue to do what we've said we would do. We're going to continue to focus on those areas where we can win. We're going to continue to focus and invest in digital and having better solutions for our customers. And we're going to continue to focus on rebalancing our portfolio, whether that's to do with our cost outcomes, because we've had costs down in absolute terms for 2 halves, which is a really great result, or whether it's to do with our capital allocation. So yes, we're going to continue, and we're very optimistic about the future. That's what we've been preparing for. I mean, we've talked about the fact we felt there was going to be a slowdown in the market in terms of revenue opportunity, that it was going to be higher capital requirements from our regulators, both here in Australia and globally, and that there was going to be more regulatory intervention in the market. Well, all of those things have played out, and we've been getting ready for that, and I'm really pleased with where we sit today.
Well, thanks very much for speaking with Blue Notes again, Shane.
Thank you.